A very good afternoon. You're watching Your Stocks on CNBC-TV18. I'm Ekta Batra. And well, we have a very active market on our hands. We have the mid-cap index, which is up around 1%. We have the Nifty, which is up over 200 odd points. We've surpassed 19,650. And the sensex, which is up a cool 600 odd points. So there is a lot of strength, which is supported by the strong global cues that we have seen across especially the US markets on account of a softer CPI. So as of now, a lot of stocks buzzing. We have stocks within the entire Nifty space as well as the broader markets which are seeing momentum on the upside. Eicher Motors, for example, is your top gain on the Nifty, up around 5.5 odd percent. Hindalco up around 3.5 odd percent. Tech Mahindra up around 4 odd percent, giving you an indication that it is sector agnostic in terms of the gains that we're seeing this afternoon. Well, we have a lot of queries lined up. Joining us this afternoon, we have Parthiv Shah, Director at Tracom Stock Brokers, and Vaishali Parekh, Head of Tech Research at Prabhudas Lilladher, joining in to answer all of your stock queries. Well, afternoon to you all. Let's get to the first question. We have Makesh Sundaram, who writes to us from Tamil Nadu, holds around 4,600 odd shares of Yes Bank, which is bought at around 52 rupees, is asking whether to book his losses or to stay invested in this particular counter. Well, currently at around 20 odd rupees, a lot of these banks have seen a strong run, but whether or not it's going to get back to those 50 levels or whether he should even average out is something that we should ask our experts. Well, Vaishali, let's start with you. What are the technicals saying for Yes Bank?
Very good afternoon, and thanks for having me on the show. So Yes Bank actually has seen a good spurt coming in these last few days. And now I'm looking at the weekly chart. I think it's coming out of its consolidation. So this person should wait at least to have a look for 24 to 25 target. And once it is sustaining above that, in all likelihood, he can get his levels of 40 to 50. So not in a hurry should he exit the stock for now, because it is getting into a trend. Even the weekly chart is getting better. So have patience and hold.
Okay, all right, Parthiv, what would your view be? Because, you know, Yes Bank has extended its rally that we've seen in the past couple of trading sessions. It's gained, what, around 15 odd percent just in 5 sessions. So there is probably some amount of confidence which is coming back on the street for Yes Bank. What would you suggest on it? Okay, Parthiv, I think you're on mute. If you can just unmute yourself and go ahead, your query or your answer on Yes Bank.
Good afternoon, Ekta, Vaishali. Sorry. So one thing about Yes Bank, Ekta, is that it's certainly a turnaround story. And currently it's quoting at around 57,000 crore worth of market cap. In terms of the book value, it's sitting at around 13.5. So in terms of price to book multiple, it's at a fairly valued 1.5 times price to book multiple. And our sense is that going ahead, I think it will be a good season for a lot of private sector bankers, including that of Yes Bank. And Yes Bank as a bank has done extremely well to grow its disbursements to the tune of 15 to 18%. And what I feel is that this is a bank which can quote at valuations around 1.8 or 2 times price to book forward multiple, which can take the share price to somewhere around 26, 27 levels, which is where probably I would suggest the investor to exit, despite it's a loss, because it's going to be a long haul if the investor is waiting for his price. Because currently, in terms of the loan book, Yes Bank is sitting at around 2 lakh crores worth of loan book. And unless and until it reaches around 4 to 5 lakh crore worth of loan book, it's hard to see a market cap of upwards of 1 lakh crore, which is where the investor will break even his investments. So our sense is on any rallies, just exit Yes Bank and convert into some better names, something like a Kotak Mahindra Bank or an HDFC Bank for long haul.
Okay, so that's in Yes Bank, strong rally that we've seen for that particular counter. Let's get to another question now. Sujata writes to us from Bangalore, holds around 100 shares of Canara Bank, which was bought at around 144 rupees per share. She wants to know what to do, whether to stay invested or to book her profits. Well, she's entered at a very good price. You know, the stock itself has given very good returns, 32 odd percent in just the past 1 year. And it's really playing on the strength that we've seen within the entire PSE as well as the public sector banking space. But is it good for more? Parthiv, what would you suggest? Do you think that the best of the rally is behind us for Canara? Maybe it's time to book some profits here?
Our sense is one should hold on to Canara Bank as a stock. One, the investors entered at a very, very attractive valuations. It's a great turnaround story for most of the PSU banks, and Canara Bank was like the front runner in terms of leading the turnaround. Not only that, right now the provisioning coverage ratio is extremely high, which gives a lot of like kind of comfort for investors to hold on. And now gradually we are seeing the credit cost coming down. The gross and net level NPAs are also kind of coming down, and now the bank is looking to disburse more loans in more secured segments, and even the retail loan share is going up, which is always a good sign. We had a reasonably good monsoon, so any worry regarding the agri-related loan portfolio for the PSUs is, I think, thing of the past. So it's still quoting at around 0.9 times forward price to book multiple. The dividend yield is also attractive, and I feel that going ahead, more good days are ahead where we'll see better ROEs in terms of the double digits, and ROEs could also touch 1.2%. So certainly hold on to Canara Bank.
Okay, all right. And Vaishali, what would your view be? Technically, do you think that it will probably just build on gains and there's more to go?
I would definitely agree because, first of all, of course, agreed that it has really outperformed. But having said that, I don't see any exhaustion in the charts. There is still scope for further. I mean, technically, I'm looking at a target of 440 from here on. 440 to 470 should be the next target. So that would be also still further more of handsome gains. So I would say please hold.
Okay, well, let's get in another question now. We have Shajir Mukam, who writes to us from Mumbai, holds around 7,000 shares of BPCL, which he's averaged at around 395 odd rupees. Wants to know what to do, whether he should hold that counter or whether he should sell it. Currently, he's sitting on a loss. Or just about flat in terms of his buy price. So what would you recommend, Vaishali? Do you think that there is room to move up to the buy price? He's averaged at around 395. Do you think he should probably add on, stay invested?
I would actually definitely think so because, first of all, after a very long time, the OMCs has given a good run up, and now this person has bought it only at the breakout level. 395 happens to be the breakout level. So once we see the stock moving past decisively 395 levels, I think this stock is ready for a target of 420 and so on. So please hold, have patience, but of course, at the same time, do have a trading stop loss of 380.
Okay, all right. So maybe he's bought it at the technical breakout levels of around 391 or 395. So maybe that would probably be a hold according to Vaishali when it comes to the technicals. But fundamentally, how would you approach it, Parthiv, BPCL?
See, fundamentally, Ekta, I think BPCL is one of the cheapest oil marketing company stocks, not only in India, but I would say over the world. Look at its fixed asset. It has fixed assets worth 95,000 crore. It also boasts of having a refinery capacity of almost 35.3 TPA, which is, I think, humongous. And the replacement cost of only this refinery is so huge. And even in terms of the trail multiples, it's quoting at of 3, and book value is also at 327. So it really makes the stock extremely attractive. What keeps a tap in terms of the upside is the change in policy and change in the stance. But our sense is that the government this time has allowed the oil marketing companies to kind of maintain their pricing. There's been less intervention. So I feel one should hold on. I think there is still an upside of at least 15 to 20% here. And over there, I would suggest that do book profits.
Okay, all right. So that's on BPCL. Parthiv, anything else in the oil and gas space that you like?
I think we are upbeat on Reliance Industries. No doubt, it's a tough call because Reliance Industries is not only an O2C player, but it also brings along with it the other business verticals. But looking at the current cycle, we feel that H2 should be a lot better for OTC companies, and Reliance Industries, in terms of sum of part valuation, is also available at a very attractive value.
Okay, all right. Well, let's get in another question now. We have Rajesh, who writes to us from Mumbai. He holds around 2,000 shares of Adani Power, which he's bought at around 345 rupees. He wants to know what to do, whether he should hold or whether he should sell that particular counter. So he's sitting on a profit at this point in time. What would you recommend on this one, Parthiv? Because, we've seen a strong recovery which has taken place in Adani Power in the past 6 odd months. Do you think that it's good for more, that the fundamentals probably support this kind of turnaround that we've seen? Obviously, a lot of the Adani stocks were under pressure, but is it good for more?
Yes, certainly. See, definitely barring all the episode regarding the Adani saga and all the controversies surrounding it, if I were to talk purely based on the operational and business performance of Adani Power as a company, what we are witnessing is that there is definitely seeming to be a good uptake in terms of the plant load factor and plant availability factor of most of the thermal power plants in the country. And it is also evident from the fact, reading the commentary of Coal India as to what sort of offtake they are doing. And looking at this, I think we've seen very good operational performance from Adani Power since the last few quarters. And all of a sudden, the fixed asset value, especially of the thermal power plants, are looking up. New thermal power plants take at least 3 to 4 years to come up. So, looking at the electricity demand and looking at the power generation space, I think Adani Power, certainly as a stock, I feel still has more legroom to go up.
Okay, and what about you, Vaishali, on Adani Power? What would your thoughts be?
So yes, I would share the same view that mostly, I mean, most of the power stocks have been doing well. And as far as Adani Power is concerned, I mean, it is in a very good trend as compared to all the Adani stocks, which shows the inherent strength. So I would say, in fact, even it's a good opportunity to buy and decline at around 375, 380, because I think in times to come, we can see a target of 430 to 450.
Okay, all right, Vaishali, as well as Parthiv. Well, just stay on. We need to take a break with the news that the markets are completely steady at this point in time. We have a good advanced decline ratio which has been maintained. Lot of stocks buzzing around. It's a lively market, lot of queries lined up as well. So we'll take a short break. But here's some exciting news for you. You can now find CNBC TV 18 on WhatsApp. The best of market, business, economy and global news truly at your fingertips. You can add the CNBC TV 18 channel on WhatsApp by following a few simple steps. Firstly, make sure you have the latest version of WhatsApp. Go to the App Store or Play Store to make sure your WhatsApp is updated. Then go to the updates. You will find a button for channels. Search for the CNBC TV 18 channel and hit subscribe. You will get all the necessary updates right on your WhatsApp feed. You can also catch CNBC TV 18 on all other social media platforms, including Facebook, X, Threads, Instagram, YouTube, and JioCinema. Welcome back. You're still tuned into Your Stocks on CNBC TV 18. We still have with us Parthiv Shah as well as Vaishali Parekh to answer all of the stock queries that we have this afternoon. Just want to put some light on the markets before we move ahead, because the kind of strength that we are seeing within the Nifty space is just evident in terms of the advanced decline ratios. So we have around only 5 stocks which are declining at this point in time within the Nifty space. We have stocks such as Bajaj Finance, Power Grid, IndusInd Bank, Sun Pharma, which are just about seeing marginal declines at this point in time. In fact, just as we speak, that ratio has even reduced further, with only around 3 stocks declining at this point in time. That's the same case with the advanced decline for the overall market and the breadth of the overall market. We have around 2,000 stocks advancing on the National Stock Exchange and below 1,000 stocks declining on the National Stock Exchange, giving us a ratio of around 2 stocks to 1 stock declining. Well, that's what's taking place in the markets at this point in time. Just want to point out there are a couple of these result reactions which are playing out today. So Natco Pharma, we've been pointing that out. That stock is down around 3.6%. We have a couple of others such as even Fortis Healthcare, which came out with its numbers a couple of days ago. So that stock is down around 2.4% at this point in time. So those are a couple of stocks which are making news at this point. Motilal Oswal, talking about how it's been a complete outperformer, is up around 5% odd. Quick Heal, which is giving it company, is up around 6% odd. And a couple of these PSU banks, so for example, UCO Bank, Bank of India, Central Bank of India, all of these stocks are showing some amount of momentum on the upside. It's tempered as compared to what we've seen previously. But let's get in a couple of more queries now. We have Vinayak, who writes to us from Mumbai, holds around 325 shares of BSE at an average price of around 625, and 100 shares of KPIT at around 300 rupees. So BSE as well as KPIT are the 2 stocks that he's holding. He is a long-term investor and is looking to hold for the next 3 to 5 years. Well, Vaishali, kudos to Vinayak in terms of the stocks that he's picked as well as his patience that he's seen through both these stocks. What would you recommend on both of these counters? Is it good for more? Do you think that he should probably hold on or maybe book profits?
Well, so BSE, I would say it would be prudent to book partial profit or at least keep a trailing stop loss, because we've seen a one-way rally from a very low level. I mean, I would say actually right from 600, and it has been just maintaining a strong uptrend. And right now we are at 2300. So you can imagine the return. And technically, I would say that there is some fatigue. RSI is also showing negative divergence. So I would say better to book partial profit, because once you get a chance, there is a dip, it would be ideal to lower your cost and further on get into the trade. So that is my view for BSE. But as far as KPIT technology, that is the next stock, right? So I would say
Yes.
KPIT, yes, there is still scope. There is no exhaustion right now. With a stop loss of 1370, the stock is ideal to hold for a target of 1450 to 1480 levels.
Okay, all right. Parthiv, your view on BSE, the stock is given, I mean, anyone who entered the stock at the start of the year would be sitting on 300% gains at this point in time. So that's the kind of rally that we've seen for BSE. What would you recommend on this one? Do you think there's more to go on BSE? Would you probably advise even entering at these levels?
He's certainly not entering at these levels, Ekta, and I kind of agree with Vaishali's view that it's always a good idea to book partial profits here. One reason being that BSE still has a long way to go to show proper volume market share as compared to what NSE is currently having. No doubt, there's been a lot of progress happening with the new management in place, and a lot of good changes are taking place. But it all depends upon what sort of momentum BSE shows in terms of trying to grab the additional market share, especially in the derivative segment and even in the cash segment. Not only that, I think after this run up, probably in terms of valuations on a trail basis and assuming a similar growth trend going ahead, even on a forward basis, is quoted as one of the most expensive exchanges world around. So I think it's no harm booking some profit here, and certainly I think hold on the rest of the position.
Okay, all right. So that's the view coming in on BSE, and in general for both these stocks, no harm in booking some profits if you are sitting on such big gains. That's the view coming in. But let's get in another query then. We have PN Giri, who writes to us from New Delhi, holds 13 shares of ABB, which is bought at an average of around 4,313. So sitting on a loss there, wants to know what to do, whether they should hold and what is the stop loss figure, if any. Vaishali?
So I would say, actually, in fact, today we were observing that most of the capital goods have got into momentum, and I don't see any weakness in ABB. So if the person has to keep a stop loss, it would be a stop loss of 4150. And there would be further more clarity once the stock moves past 4380. Once we see that it's ready for a takeoff towards 4500. So that would be the strategy that one should apply.
Okay, any view on ABB, Parthiv, from your end?
Yes, certainly, I think despite very steep valuations, looking at the current order backlog and also looking at the current margin trends, I think ABB looks very good to hold on from here as well. It's kind of a very good proxy to a lot of key themes of infrastructure where even the government is usually focusing on, especially likes of railway, power, automation. So I think a lot of private capex is also getting kickstarted, and there's a total quantum of almost 6 lakh crore worth of private capex on stream over the next few years, where ABB has garnered a lot of good contracts. So our sense is that it's a fantastic company to hold on to in current scenario, and this particular capex cycle is there to sustain for a long time.
Okay, all right. That's on ABB. Now let's get in another query. Rakesh Damani writes to us from Mumbai. He says he has been holding 1,500 shares of Sudarshan Chemicals, which he's bought at around 360. He's been holding Sudarshan Chemicals as well as Heidelberg Cement. I think 360 shares of Heidelberg Cement for the last 10 to 15 years, which he has received as inheritance. So he wants to know the short-term view for these stocks. Well, it just gives you a sense in terms of, the long-term holding, because it is an inheritance that he's got. Parthiv, what would you recommend? Because, the query is for a short-term view on these stocks. But do you think that there should just be a longer-term view, and even though it's inheritance, one should just sort of hold on to them?
It's absolutely assuming it's an inheritance and the original cost is quite low. And also attributing the fact for Sudarshan Chemical that the cycle for them have been one of the worst globally. And they have a pigment capacity which is at scale in terms of scale. They are the third largest pigment producer globally. And in India itself, they have a 35% market share, and their pigments go into all sort of applications like coating, plastics, inks, cosmetics, which are very good industries, consumer-centric industries. And our sense is that probably the worst of the cycle is over, maybe 1 or 2 quarter here and there. But going ahead, once we see a very good cycle, thanks to the fact that they've increased their gross block over the last 4 or 5 years, I think we'll see upping of the capacity utilization, which will drive operating leverage. And that's where we feel that Sudarshan Chemical could do well. Talking about Heidelberg Cement, again, I think here's a classic case of a cement company which is MNC in pedigree, but kind of struggling to grow further in the country. And there's a lot of chatter regarding, M&A activity in this counter. So currently, the valuations are priced to perfection. The only binary event that can drive the stock valuations further is any sort of M&A activity. Otherwise, I would suggest adding on to Heidelberg only on declines.
Okay, all right, Parthiv as well as Vaishali, thanks very much for joining in and taking us through all of those questions. Okay, all right. Well, we have a couple of more queries, but before we get to that, Parthiv, just wanted your thoughts in terms of a couple of these pharmaceutical stocks which are buzzing on account of earnings. We've got, the likes of Fortis, we've got the likes of Aster DM, Narayana, a lot of these hospital stocks and focus. Would you have a view on a couple of them?
See, we are upbeat on the entire hospital chain of companies for the long term. The reason being that, in terms of per bed capacity, India is hugely underpenetrated. All these companies like Fortis, which has now a new promoter bringing in new capital, plus they have a lot of capacities work in progress, which are going to be on stream. And what we are seeing is that the revenue per average occupied bed is constantly going up. Healthcare costs globally as compared to that in India, relatively India is a lot less. We are seeing more traction in the healthcare insurance space as well, which is bringing in new patients, new therapies on stream, which is where the hospitals will have a very good cycle over the next 3 to 5 years. So yes, like so Fortis looks good. Apollo Hospitals is also looking good. And on some declines, I think even a chain like Jupiter Hospital could also do well.
Okay, all right. And Vaishali, would you have a view on a couple of these healthcare stocks? Which one looks good technically?
So technically, I agree. Fortis also has good potential, but I am also looking at Apollo Hospital. So as far as the hospital category is concerned, I still have a favored pick at for Apollo Hospital. But purely on technical terms, I would say that yes, Fortis is showing signs of revival, and I think it can go towards 380 to 400 levels. That would be the trading strategy. And as far as we're talking about the pharma pack, I'm looking at Cipla right now. Cipla looks good, and in the mid cap, we've seen Wockhardt.
Okay.
Wockhardt has given a breakout, so I would look at these stocks.
Okay, all right, Vaishali as well as Parthiv, we're going to let you go on that note. Always a pleasure. Thanks very much for joining in and speaking with us. That's all the time that we have on the show. But do remember, you can always email us all of your questions and we'll address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade.